Hello and welcome to the market update for Tuesday, July the 27th. Kind of a down day today, and it's not surprising when we look at the when we look at the numbers or look at the indicators. We've been talking about breadth being a problem and how the market is rallying higher on low breadth, meaning there's few stocks that are causing the market to go higher. That is usually it usually shows that the strength of the rally is not there. And now I'm also not saying that we're on the verge of a huge correction. Typically, as I've been talking about for several weeks now, markets will tend to have larger corrections off of an overbought condition, usually an extremely overbought condition, and that includes the breadth. There's usually pretty healthy breadth or strong breadth prior to a bigger pullback. So I think this is just one of those dips that'll probably get bought again. Maybe has a little bit further downside. There's a lot going on this week. The Fed meeting tomorrow could be a catalyst one way or the other, causing the market to go up or go down. And again, when you have the first day of a sell-off like this, it's hard to know. When you're looking for a catalyst, it's hard to know what that catalyst will do, especially something like a Fed meeting. It could push the market either way. It could cause it to sell off a little bit further. If the traders think that the COVID variant is going to be worse and maybe cause another slowdown. I don't think there was going to be a shutdown again, but it could cause the Fed to be a little bit more dovish. And if they aren't dovish, maybe that could panic the markets as well, and thinking that maybe they should be. So when it goes to Fed meetings, if you're trying to figure out what's going to happen through a Fed meeting or how the market is going to interpret the Fed, you know what? I just give up right now. You're not going to be able to know that. Long ago, I stopped trying to focus on, when the Fed comes out and says something, trying to focus on what that means going forward. Remember, I think it's really important we're technical traders. That's why you're here. I'm assuming the whole software at TradersPro is designed around trend following, not trying to outsmart the market, just trying to follow the trend. Okay. Well, who creates the trend? Well, the trend is created by the big institutional investors, the big money players that actually move the market. They're the ones that are investing millions and billions of dollars into research and analyzing the numbers, the fundamentals, everything. They're the ones that they have experts that are Fed experts that listen to every word that Chairman Powell says and tries to determine what that means going forward. Let them figure all that stuff out. We're just going to follow what they decide to do. So this week, when the Fed comes out with their decision, well, first of all, they're not going to raise interest rates. We know that, but it's all about trying to figure out when they will start to raise interest rates. That's what the market's trying to determine. But let the so-called experts out there figure that out, and we're just going to follow along. Now, I will tell you though, there tends to be a lot of times with these Fed meetings, there tends to be a false move right when the announcement is made, meaning the announcement comes out, the market might start to rally, and then over the next few days it starts to drop, or it drops immediately, and then over the next few days it starts to go back up. There tends to often be a little bit of a false move there, so be careful when you're analyzing that. Now, as far as direction alerts, let's go through these here. You'll see what I was talking about as far as market breadth. But one thing I wanted to point out here. And we don't spend much time on the long-term signal because we know we're in a bull market. We know we've been in a bull market for a while. When you're in a real when you hit that, you kind of hit the 5 range here, the market can still go higher. This number can still go higher, but it kind of peaks out right here. But one thing I wanted to kind of point out was you can see the little bit of the trend line right here, how it started to kind of roll over, and it looks like it's kind of coming back down a little bit. So it kind of peaked right up here in April and May. Now again, it doesn't mean that it can't move back up into this range again. The market can't go higher, but I thought that was something interesting to point out as far as something real subtle over the long term. You can see the nice steady growth rate through here. Bull market was rising through here, and this goes all the way back to those. Well, we can't see the bottom here from COVID last year, but you can see that since the summer of last year, we've been steadily rising, but now it's kind of flattening out a little bit, even kind of declining a little bit here. So we'll keep an eye on that, especially if the market has a little bit of a bigger sell-off here. See if that starts to affect the long-term trend there. In the shorter term, let's look at the indicators, and then we'll come back to this. We already know it's showing us a tired market. You still have sentiment that's high. Sentiment is above momentum, which is above breadth. Now, these are momentum's in the extreme range. Remember, these update overnight. So this is based off of the close yesterday, which was an new all-time high. Today, obviously, we're selling off a little bit, so we should see this move this way when it updates tonight. But momentum has been in the extreme range, but not overly extreme, not in the far right side, which is typically where you start to see the bigger correction start to take place. You can notice, though, a little bit of a divergence that's showing up here. You can see here's the S&P 500 chart. It went to a new high right through here, but notice you've got lower highs that are showing up on momentum. So momentum has kind of been slowing down a little bit. That's one thing we look for on these charts is divergences. Breadth, we talked about breadth. You can see how breadth is really lagging here. Like it's been lagging for a while. That's why we've been talking about it for a while. You've got look at that. You've got lower highs on breadth that ever since April, and that's where it peaked was in April right there. You're seeing the market move higher. So the market's moving higher with fewer stocks participating. Okay. By the way, it's not a coincidence that also lines up with what we're talking about right here. You can see where it peaked out in April, May, right up here, and then it's been kind of declining. A lot of that has to do with the lack of breadth, the lack of participation. Now, typically though, well, I'll come back to this. Let's take a look at sentiment here. Sentiment is high, or is high. It's not in the extreme range, but it is relatively high here. Let me move down here on this. You can see here, but still, it's kind of the market's been going higher, and sentiment's been kind of pulling, diverging a little bit there. Now, let me go back to the breadth chart right here. Now, you say, well, okay, so the market hasn't, there's been fewer stocks that have been leading the rally. Now, does that mean that we're going to have a market crash? Well, typically market crashes don't happen, and they tend to happen when sentiment is high, meaning everyone's really bullish, and when momentum and breadth, all these things are really at those extremes. Okay, in other words, the market crashes happen when everyone believes that the uptrend is going to last forever, that there's no way the market's going to drop. And where do you see that? Well, you see it when everything looks strong. Everything looks really really good. So this leads me to believe with the lagging indicators right here, this explains why we've had kind of this choppiness over the last several months where we're kind of moving higher, but it's kind of like a slow grind. And like I said, there's fewer stocks here leading the rally. So if you're seeing the index, this is what can be frustrating, is you're seeing the indexes go higher, but the stocks you're buying aren't going anywhere, or they might even going down. Well, why is that? Well, again, that's reflective of the breadth. You just happen to be picking the stocks that aren't making the big move. Well, how do you find the stocks that are making the big move? Well, that's what makes it difficult, because there's fewer stocks making that move, which means that you have to be more precise, or in some cases more lucky, that you're picking the right stocks. When you have real healthy breadth, it almost doesn't matter what you pick. You're going to make money because everything's moving in that direction. So just because the indexes are going up or going down doesn't mean that it's a strong market, okay? And I think this is what gets missed on CNBC all the time, is they don't know how to read price action. They don't know how to read internals of the market. And so they just look at, is the index up or the index down? If the index is up, oh, it's a good market, or it's a good day. And there's a lot underneath that can be telling us or warning us of what could be to come. So, but this leads me to believe, because the sentiment is pretty high. Okay, it's not extreme yet, but it's pretty high. So this tells me that, and you can see even with the chart below here, you can see it's been elevated for a while. We've seen some high market sentiment for a while. So there's a lot of people that believe are confident in the market. So the sentiment is there, but what needs to happen is we need to see the breadth kind of catch up. So this leads me to believe that we're going to get at some point a rally that brings a lot of these stocks back up, and we get that breadth back up into this extreme range right here. Now, I think in order to kick that off, though, we need not a market crash, but a little bit of a deeper sell-off, because these real shallow sell-offs that are getting bought just aren't providing enough of that boost, that buying energy to get us to that extreme range. So there is some optimism that there's still some room to rally, but we do need to pay attention to these things, because we should get a pretty strong warning when a much bigger correction is about to take place. Now, that being said, like I said, with the one-day sell-off today, I'm not seeing a lot of things that I would want to buy. And so we're not going to have a lot of stocks that we're going to be talking about today as far as getting into a bunch of things just because of that. I'm a little bit concerned and I'll show you something else as part of the training today that tells you that you need to kind of wait for a little bit better conditions to show up, at least if you're going to be buying. If you're going to be shorting, there could be there are a lot of charts out there that are in downtrends or looking pretty bearish today that you could short if that's kind of your thing. All right, let's go into the buy-sell ratios here. You can see that the sells have been coming down. That'll probably tick up a little bit, though. Like I said, this updated last night. This will probably tick up a little bit with the selling from today. Sentiment, same thing. It's starting to get a little bit closer to this extreme range, but it'll probably back off a little bit with today's selling when that updates overnight. Let's take a look at the individual charts here. So again, you can see we're still reaching the higher highs. So the trend is still up. We're not debating that. But again, you can see, it started to sell off a little bit here. Here was the big sell-off day. That was last Monday, or maybe this was Monday. This was Monday right here, because it had the big drop. This was the Friday before. So basically a 2-day drop right here. It did decline a little bit on Thursday, but not much to where you in hindsight, we can see it was starting a bigger decline, but you're getting these just real quick drops, and then the market's just rebounding from it. I think we need to have a little bit of a deeper sell-off. I don't know if that'll happen right here, but I think that we'll probably need to see that before we we can kind of get that surge that would create that extreme overbought condition. But like I said, the problem with the first day or just a down day today is that, you know, we don't know if the market's going to recover quickly and move higher, or if it's going to have a few more days where it dips down a little bit deeper. And so, in other words, you're left guessing. You're trying to guess what's going to happen next. And usually when I'm in those conditions, I end up guessing wrong. Maybe some of you can relate to that. And so we don't want to be guessing. Let's wait until there's a little bit, we have the probabilities on our side a little bit more. And I would even argue that, like I said, there's probably a greater downside risk because this could just be the first day. You don't typically see a day like today and then have it go right back up again, but it's happened before. So that's why I'm not going to be recommending a lot of things today because of that. Although we will take a look at some that and some that we've been keeping an eye on. We're still waiting for some of these charts to go back to a buy signal. So, but all the indexes are like this, and you know, the Dow. One thing I can point out on the Dow is we did have an all-time closing high yesterday. Remember we were talking about this was an intraday high, all-time intraday high back here in was that May? Yeah, back here in May. And we did finally have a closing high that was above that yesterday, but then obviously we're right back down today. Although percentage-wise, you can see the Dow's not down as much as some of the other indexes. But like, what's interesting is that, especially when you look at the small caps here in just a second, that shows you what I was talking about with breadth. A lot of the money is in the larger, they're in the larger Dow stocks right now, and they're in the larger tech stocks right now. Microsoft, Apple, Google, Amazon. The money is not going into the small caps, as you can see here. Well, first of all, you can see that even the Nasdaq 100 got hit today. Tech got hit a little bit hard today. You can see the bigger move down. And then you look at the Russell 2000, and it's been hammered for a while. It's peaked, you know, all the way back here. It's been declining. Has another big down day today. So again, remember, when the big fund managers, again, we're just trying to follow what they're doing. Right now, they don't like the riskier small cap stocks where these companies can go out of business overnight. They're not making money yet. They have potential to make money, but they're not making money yet. They're avoiding them. They're getting out of those stocks. They're staying with the large companies that aren't going to go under. So that's what they're doing. Then why would you be pouring your money into small cap stocks right now? You might analyze them and you might say, well, these big fund managers are wrong. I believe these stocks are going to turn around and I'm going to get in first. That's fine, but you can't move the price up. You can't move those small cap stocks up with your buying. Your 100 shares you're going to buy or 200 shares you're going to buy. So you need these big guys to be behind you to push that price up. So there's no reason to be getting aggressive with small cap companies right now when you don't have the participation from the big institutional investors. So this is something that is a clue that the market is in trouble right now. We don't want to be buying heavily into the market when the small caps are underperforming the way they are. And especially now that you've got big cap tech stocks in the Nasdaq 100 that are also selling off today, you've got even fewer breadth. You're talking now about the large cap Dow stocks leading the way, and there's only a few of those. It's not a good environment to be buying in right now. All right, the bond market here, we can see that bond yields did move up a little bit, and that caused the bond TLT to drop. We had the big bearish engulfing candlestick right there that led to a drop. Since then, we've just been kind of moving flat. And so we're still in an uptrend. You can still see that in fact, you can see this trend line right here. If you connect the lows, we're still holding that trend line. But what we got to pay, when we did recently go to a higher high right here, but I think this low is going to be important. This low and this low are going to be really important to determine if the trend gets broken or starting to break or start to roll over. If the TLT bonds drop and we go below, and this would be last Wednesday's low right here, I think. If we drop below that low right there, we'll more than likely break that uptrend line, that support line of the uptrend, and we'll have gone to a lower low right there. Now this was the previous higher low before we went to a higher high, so this one's actually a stronger signal of a trend reversal if it breaks below that. But this would be kind of the first clue. If you break that trend line, that could be a potential that the trend is rolling over in bonds. Bonds could start to decline. And then if it breaks below this low right here, that'll really be a strong signal. So those are the two things we'll be watching for in the next week to see if either of those get taken out, either of those lows get taken out. But other than that, so again, I'm not trying to predict a trend reversal. I'm just recognizing that we're real close to a potential trend reversal, even though the overall trend is up. So the overall trend is still up in bonds, but it's at a critical spot right here. And so that's what we want to pay attention to see if that trend starts to show signs of a reversal there. All right, gold. Gold is kind of in no man's land still. I talked about how we had this impulsive move down. This was corrected, had a quick impulsive move down and an impulsive move up. And then since then, we've just kind of been drifting. There's a little bit more sideways here. We did dip down a little bit further. Actually, we've been real sideways the last few trading days. We're just moving flat. The key spots are going to be this high right here. If it breaks above that high, it would mean that this was just a pullback, and that and especially if it moves up in an impulsive way, moving up several days in a row, it would indicate that maybe you're back to an uptrend in gold. If you take out this low right here, obviously you're still in the downtrend, but that's pretty far away to get that confirmation. So I just don't see anything right here that I'd want to be trading as far as gold just yet. So I have a little bit stronger trend direction that I can read. Oil, we talked about this in the last update that oil had this impulsive move down. Now, one thing I pointed out with this chart was it was hard to tell if maybe this was a wave A, wave B, wave C of a bullish ABC pattern, and maybe this thing is going to go higher, or if this was just a little pullback right here, and this is the peak, and this is just the start of a downtrend, and then you start stair stepping down. But what's making me a little bit more bullish on oil in the near term is that this had an impulsive move down, and this was an impulsive move up, and we're starting to move a little bit sideways right here. This is acting like it still wants to go higher. Doesn't mean it will, but I would. It's looking more, by the behavior, it's looking more like this is a bullish ABC pattern, and that oil is still going to work its way higher. I know that may not make a lot of sense when you know that OPEC is sitting right there ready to deliver more oil, put more oil on the market at these prices being up this high, and they don't want the prices to get too much higher because they don't want the shale producers to jump in. But the chart is saying otherwise right now. It's still saying in the near term we could end up moving higher until we see that change. Now, what could cause me to believe that's a change? Well, if we suddenly have a big sharp move down, then you'd have a clear lower high right there. You already had a lower low. So then you'd look to see if maybe you're going to have a lower low. You're already in a downtrend, getting lower highs, lower lows. Maybe it is moving down. But like I said, with that impulsive move down, impulsive move up, that tends to be what you see at a bottom. Even if it's just a near-term bottom, which this could be just a near-term bottom. And so I'd be leaning more towards the probability that it still has a little bit further to go up, at least in the near term, until I see something different. All right, the dollar has been trending up, higher high right there. We have been moving down in the near term there, but we're looking to see if this low holds right here and we end up having a higher low. That's going to be a key spot to watch for the dollar. If it dips below that, now you've got a lower low for the first time in a while. You've had these clear higher highs, higher lows throughout this uptrend. There's higher high, higher low. It could just be, though, that this is a bullish ABC pattern right here, and then it continues to move higher. But this is going to be the key spot to watch right here. If it's going to, and really this is a pretty deep pullback off of this move up right here. But it's you can have sometimes deep retracements. But if it does dip below this low right here, we might be in the midst of a trend reversal in the dollar. That's something to keep an eye on as well for this week. And if it doesn't get down there and it starts to rally back up a little bit, then I'd be more inclined to assume that the uptrend is going to continue in the dollar. But overall, the trend is still up. So we want to recognize that the dollar trend is still higher until we see those key areas get broken. And then the VIX starting to spike up a little bit today. One thing I want to point out is something I pointed out last week when we had that Monday sell-off. We saw the VIX spike up right here. And remember, I told you that we'll see if that is significant because we had lower highs on the VIX. Every time the VIX would spike up, it had lower highs. We have a higher high right here. If the selling continues this week, we want to keep an eye on this high. Do the VIX spike up above that high? If it does, it could indicate that volatility is significantly increasing in the market, and that would tend to be bearish. Remember, increased volatility is bearish, that would be something to kind of watch right there. We don't have a huge spike today, so there's not really any panic selling today. But remember, this is just the first day of a sell-off. That could increase dramatically, particularly when you have a potential catalyst tomorrow with the Fed meeting. You have earnings too coming out. There's a lot of companies reporting earnings this week. Big companies reporting earnings. It could sway the market as well. Chip stocks, real quick. SMH, they're dropping pretty dramatically today. And you can see that the chip sector has been lagging. It's not reaching new all-time highs with the market. So again, if you want a real healthy uptrend, when you see the S&P 500 reaching new all-time high, you'd like to see the chip stocks making new all-time highs. You'd like to see the transportation stocks making new all-time highs. There's a transportation stock index right here. Again, they're not making the Dow's made a new all-time high yesterday, but the transportation stocks aren't. They're still making lower highs, especially with this drop here. So that's a big divergence right there. It's something to pay attention to. What should happen is we should start to see these two areas of the economy, the chip stocks and the transportation stocks, start moving up. And maybe we start to see that the indexes sell off a little bit more, but these indexes start to move back up and start trending back up. Or we have an up day in the markets, and these have a higher percentage up day that causes them to start outperforming. We're just not seeing that yet. So again, I don't see anything in the analysis so far that makes me really want to go in and buy a whole bunch of stuff. So that kind of sets the stage for, what do I recommend today? Well, I'm not going to recommend much, but there is a couple of things that we can look at under the computer and technology sector. I've talked about this ZDGE stock, and it's still kind of, even though it's down today, it's still in kind of this corrective phase. It's kind of chopping back and forth after having this run up, and we can look at the signal here. It is looking like it'll drop to a sell signal after today. But again, what's the confirmation on this anyway? If it goes back to a buy signal, that would be the signal to get in. As long as it kind of holds this corrective range right here, it could go to a sell signal like it did and still eventually go back to a buy signal, or you could wait for it to break out of this kind of sideways range. So this still has potential. It just might be one of those you're watching for a little while, but it hasn't done anything to make me want to just throw it out the window. It still looks okay as far as the larger uptrend. Now, one stock that we were waiting for it to go back to a buy signal, I've changed my mind on. I don't want to. I'm looking at a bigger correction for this stock. Is business services right here. This EVRI right here, Every Holdings. When I originally brought this on the radar, we were looking at this nice little stair step right through here. There's a nice little ABC pattern right here, broke out higher, and this looked like wave A, wave B, and it looked like we were in wave C. We're waiting for it to go back to a buy signal as the confirmation. I said it was very important we wait for it to go back to the buy signal as confirmation. It didn't, and now what it's done is it went to a lower low right here, which is a warning sign. This move down is looking a lot more impulsive rather than corrective. And then it had this little rally right here, and then today it's going lower again. So what I think could be going on here is that we're in a larger correction on the stock. I had these little stair steps up right here, and that created this larger move up. And I think now you're getting a larger wave A, wave B, wave C, maybe pulls down to this area right here. And then maybe it starts to move back up again. So if it can pull back in this area right here, I could revisit this stock. Maybe you put it in a watch list you're going to revisit later on. And now it'd have to pull back right here and then start to move back up again. But because this is now weeks or months away from possibly completing, I'm not going to worry about it. Why? Well, because if it gets down here and then starts moving back up again, guess what's going to happen? It's going to show up it's going to show up right here again, under the holds 98 strength rank or close to a 98 strength rank. It's going to show up on this list again, and I can see it again. But because it kind of broke those key areas there, this is one I'm no longer going to be watching. So I thought I'd point that out. I'm not going to point that out on every stock that I go over, but I thought I'd point out on that one because this is what happens. We do the analysis. The trend looks fine. We're waiting for that confirmation, and we don't get that last bit of confirmation. We don't get that buy signal to get in. And there was no harm done on this one. This one never got there. It rolled over. It broke the uptrend. Move on. Go find another one that is acting like it wants to move higher. Now, one thing you could also focus on if you don't want to, look at the sectors or spend too much time trying to find the strong stocks in the different sectors, you can go right to your muscle stocks as well and look for some patterns in those. But this leads me into the quick trading. I'm just going to do a quick trading today, but I think this is important because one of the reasons why we do the market update first or look at the market conditions first before we start looking at individual stocks is we want to know the environment we're in. And so far today, we're in a low probability environment for buying stocks. And I've gone through and kind of pointed out why that is. And that comes from my experience of being able to read these charts and read some of these indicators. What's a real simple way that you can know the environment is stronger for you? What's a simple way you can know that the breadth is better for you in the market, is more in your favor? Well, there's a few things you can look at. You can go under your index tab up here. And you can look at the buy-sell ratios. Right now on the Dow is actually decent, where you have 15 buys and 7 sells, just over a 2-to-1 ratio there. There are 2 buys for every 1 sell. But look at the Russell 2000. There's 531 sells, 302 buys. It's negative. It has more sells than buys. Now the Nasdaq 100 is probably the strongest of the indexes. 43 buys, 15 sells. It's almost 3-to-1. But this is where you can kind of see that market breadth a little bit. Now it can also show you when things are getting extreme. You know, one thing that you can look for on these indexes is, do you start to see double-digit buy-sell ratios? Is it 12-to-1 or 10-to-1 or 11-to-1? That usually is tell you're in an extreme condition. There's almost every stock is a buy versus a sell. You know, pretty soon you're going to run out of people that can buy. You know, there's not enough money to keep the prices up, and the prices will start to correct. And there could be we could get more extreme to the downside. When we had the big market sell-off after COVID, all of these were negative, or less than 1, excuse me, where there was a lot more sells than buys. In fact, there are very few buys at the very bottom. But even so, there's even a simpler way to kind of know your condition. And if you go to, let's go back to our direction alerts and click on this buy sell ratio box right here. This indicator down here is giving you the buy sell ratios basically of the entire market. So we were looking at the indexes right there, and the biggest one we were looking at was the Russell 2000, right? 2000, the largest the 2,000 of the largest companies out there. Well, there's a lot more companies than that. You know, there's like 8,000, maybe more than that, type companies out there that trade. This is basically looking at everything. And right here is looking at the ratios right here. And what you'd like to see, you can see that that we've had some extreme conditions where, you know, we had, you know, 10-to-1, 12-to-1, you know, buy sell ratios. Kind of a minimum is you want it to at least be 1-to-1. If it's negative, then again you've got more sells than buys. We don't want to try to be predicting the bottom. We want to be in when the big boys are buying, and there's a majority of stocks that have buy signals. So a real simple rule of thumb of whether or not you should be getting into any trades is that overall buy sell ratio above 1. And right now, and the way you can see this, you just put your mouse on the end of that's yesterday, because again it updates overnight. But as of yesterday, we're at 0.54 on the buy sell ratio. So we're below 1, and we're well below 1. Meaning there's twice as many sell signals out there than buy signals. And as a trend trader, we're not trying to pick a bottom. We're trying to wait for that momentum to increase. So when we talk about market breadth, we need that breadth to increase. So, and you know, and that could, you know, you get a few real strong days, and you could get back above there pretty quick. I'm sure there's a lot of stocks that are just they're barely in hold. I've seen it when I'm looking at my charts. I go through and look at a lot of charts during the day. So it wouldn't take much of a rally to kick that ratio up above 1, but that's going to be key. If you see that ratio below 1, don't don't trade any stocks yet. Wait. Wait until you have that momentum, at least moving in that direction, moving in your favor there. When it does move above 1, especially if it's still barely above 1, you want to stick with high strength ranked stocks. That's what the service is designed for, and it's what's going to give you the highest probability of making money. You want to go to the indexes. If you're going to go to the indexes or the sectors, pick the strongest sectors and the best stocks within those sectors. What we do on a weekly basis anyway. Or you want to go into your muscle stocks. I was going through the muscle stock tab right here. There's not very many stocks in the muscle stock tab. That tells you a lot right there. Okay, these are stocks that are really outperforming the market. Usually, when you have a whole ton of these stocks in this list, that's a good, healthy market. But we've only got 10 or 12 there. And there are some patterns I liked in this one. This PMFT right here, Performant Financials. You got kind of this cup with handle formation right here, a little cup. Looks like it's kind of forming the handle. Went back to a hold today, or should go back to a hold today. And again, I'm not saying to go buy this thing but if market starts rebounding and this starts breaking out of that cup, and that market breadth gets above 1, yeah, this would be one that you can kind of keep on. Stocks you could start putting in your watch list and you want to keep an eye on. This DDS, this is Dillard's. I think I even brought this one up as one to kind of keep an eye on as well. A potential trade. I think I did this last week. There's a potential higher low, and then you've got this breakout area right here. And this is when I talked about the stock last week. I say it could possibly go to a buy signal, but not break out of this range. You might want to wait for it to break out of that range as extra confirmation. And I would add you might want to wait for it to break out of that range and wait for that market breadth to get above 1 to have that extra momentum in your favor there. But when that does, you want to stick to these stronger stocks, stick to the muscle stocks, stick to the smooth sailing stocks. L Brands, I think, was the pattern I liked in there. It still has a buy signal and it still has an uptrend, What was another one I liked in this? Anyway, but that you want to make sure you're aligning all these things in your favor. That's the bottom line. We're trying to align as much of these probabilities in our favor to give us the best chance, to give us that edge. And more importantly, we want to align ourselves with the big institutional traders. Never forget that. These are the ones that we're trying to follow. And they're not going to be right all the time. But we assume that they are spending the money, they are doing the research, they are doing everything they can to make sure they're right, and they're more likely to be right. And that's why these big companies and big institutional traders have been around forever, is because most of the time they are. And so we're gonna try to play that probability that most of the time they're going to be right. All right, so that's where we're at today. I know it wasn't real exciting because I know you're tuning in to get the next trade to make. But I think the biggest lesson today is to recognize when not to trade, and hopefully you're able to learn some things today that will help you recognize that, and hopefully things change. Hopefully on Thursday, maybe we get something that tells us that we could start getting back in, or that we're close to getting back in, and we get back to having more exciting market updates. All right, thanks everyone. Have a good rest of your day, and we'll see you on Thursday for the stock specific class. Bye now.